Peace and love, everyone. It's your boy LR Cohen, and welcome back to another installment of the Lone Ranger podcast. Before we get started, just want to say thank you for everyone's support on our Instagram and TikTok and YouTube platforms. We're doing real well there. But if you aren't following, again, you need to follow the Lone Ranger 08 on TikTok and Instagram, and also subscribe to our channel, the Lone Ranger podcast on YouTube. Just look for our symbol and hit on the bottom right-hand corner. You'll see a red subscribe button where you can subscribe to our channel and keep all up-to-date information on everything that we're going to be dropping here. But to go ahead and get started, we're going to start it's a mini series. It's just going to be one show, but it's going to cover a wide range of things. Last episode we talked about just answering some questions from some of our fellow Rangers, but today we're going to get back on track with some things that have to deal with mortgage payments, since I'm in the mortgage industry. So this is going to be dealing with loss mitigations, which is basically anyone who is facing troubles and can't make their mortgage payments and they're looking for other options. So today's episode is going to be called Lost and Found, Understanding Loss Mitigation Options. Okay, now to get started, what is a loss mitigation program? A loss mitigation program is a set of options that a mortgage lender or a servicer can use to help the borrower who is struggling with their mortgage payments avoid foreclosure. And the goal here is to reduce losses from both sides, okay? So basically what that means is you have an agreement with the lender or the servicer based, on your circumstances, and they give you three options to really apply for. And if you're deemed eligible for either one, they can be used as an option to avoid foreclosure. So let's go over some of those options, okay? Now, the first option is a forbearance. This is typically when you've been behind on your mortgage. I'd probably say at least 3 months. And what a forbearance is it temporarily suspends your payments, and these forbearances normally last for about 3 to 6 months, and it allows you to get back on your feet, right? If your mortgage payment is $1,200 a month, if you don't have to pay it for 3 months, that's $3,600 that you can use to do whatever, like repair a car or something like that, or just pay for food, really. I've been there. Now, one thing you want to note here, Rangers, is when a forbearance ends, if your lender does not roll those past due amounts onto the back end of your loan term, you're going to be required to pay that in full when the forbearance ends. And your only other option outside of that would either be like a repayment plan, which we'll get into, or modification, which we'll get into. But if you don't qualify for any of those options, that means they're going to report to the credit agencies that you've been delinquent for the past 3 months. So it's very important here, Rangers, that you understand that if you're in this predicament, or if you know someone that's in this predicament and you're giving them advice, a forbearance is basically like a Band-Aid, okay? It's going to allow you to, not make your payments for a few months, but once that forbearance ends, if the lender doesn't roll that past due balance to the end and allow you to pick up where you left off, they're going to require for you to pay that in full. So just be mindful of that here. Now, the second option here is going to be a repayment plan. Now, a repayment plan is an agreement between you and the lender or the servicer, where the borrower basically pays back the past due amount in monthly increments until the payment is brought current. Now, the note here is this is normally a 3 to 6 month installment agreement. So if you're past due, $10,000, they're basically going to take that $10,000 and, divide it by 3 or 6 months. And then whatever that payment is going to represent your new repayment plan payment. And they're going to require for you to make that payment on time for the next 3 to 6 months till you're brought current. And then when that happens, your term should return to normal, your monthly payment that you had before, you went delinquent. So that's a repayment plan. Pretty easy. You just pay back the past due amount. But again, the payment most likely could be higher than what you're normally paying because you're going to be paying back a large past due balance in a short amount of time. So shorter the term, higher the payment. Longer the term, shorter the payment. That's normally how it works. Now, once you get caught up again, you basically proceed as normal, okay? Now, the third option here is a loan modification. Now, this is something that people try to avoid, mainly because the modification, which is a complete revision of your loan term or your original loan terms here, it means that you could possibly get a higher rate in payment because the modification is based off the pricing of the modification, rather, is going to be based off of the current market price. So in today's market, your rates are in the low sixes and they can work their way up. So if you got a 2.25% rate and you need to do a modification to avoid foreclosure, and they're like, hey, your new payment's going to be XYZ at 6%, don't be surprised, because modification rates are going to be based on current pricing. Okay, so very important to note. Now, next here, the last two options here are the absolute, they're basically just like your last options. Okay, if you don't qualify for forbearance, or you did qualify for forbearance and it didn't work, or if you got on a modification or a repayment plan and you're still falling behind, or even if you get denied for all of those options, what are the other two? So these are basically the last resorts. One of them is a short sale. Now, what is a short sale? Short sale is basically when the homeowner sells their property on the market and takes what they can get for it, basically. If you owe $200,000 on the home, but no one's buying it for $250,000 or $300,000, you may have to sell it for $150,000 and take a $50,000 hit just to get it off the books. So that's what a short sale is. Just basically selling for wherever you can get, or at the very least lower than what you owe on the property. And this is also known as a pre-foreclosure sale. So this is another way to avoid foreclosure. But there could be some tax implications or a financial obligation indications that may come with it. Sometimes the bank may allow you to do the short sale and they'll just write the remaining portion of the mortgage off. But sometimes they may pursue it. So you just gotta be careful. And then lastly here, the last one here is called a deed in lieu of foreclosure. And basically what this is voluntary surrender of the title of the home. Basically, it's an agreement between you and the lender or the servicer, where you voluntarily transfer the title of the home to the lender in exchange for being released for the financial obligation. So it's basically saying, hey, look, I can't pay for this home. I can't find nobody to buy it or whatever. Here's the title. But you have to release me from the financial obligation of this mortgage. And they'll say, if you're deemed qualified, they'll say yes. So those are your 5 loss mitigation options. Okay, you got your forbearance, you got your repayment plan, you got your loan modification, and then you got your short sale and deed in lieu of foreclosure. Now, the note for the last 2 is this could possibly, in most cases, okay, it could affect your future financing when you go to purchase another home, or even if you refi or what have you. And the reason why is because most lenders may require 5 to 7 years since the transaction before they can qualify you. I know the mortgage company I work for tends to have 5 to 7 years. If you did a foreclosure or pre-foreclosure sale or something like that, we ask them like that if they've done something like that in the last 7 years. So that could affect future financing. So just be cognizant of that. But there's always hope. So those are your 5 options there. Now, one thing I want to make sure everyone knows is that everyone does not qualify for a loss mitigation option. Okay, it's going to be based off of just like any other loan. Can you afford the payment? So if they do an application for you and it's determined that you can't make the monthly payment, or you've used all of the available modifications before and they still don't work, then they may deny it. And if that's the case, then you might want to look to sell the property as a way to avoid foreclosure. Now, plan B. What do you do if you don't qualify for the modifications and you still want to stay in the home? Well, the last resort that I can suggest here for you guys is to search state and county mortgage relief programs. I worked with the VA for a year, and I used to give those websites out a lot to a lot of veterans, even civilians that called in. So these states and counties have been awarded money to give out in the event of emergencies like this, where you can get awarded up to 1 to maybe even 3 months of mortgage payments or even monthly expenses. You may even be able to qualify for a grant that you don't have to pay back, where it pays back the entire past due balance. You just never know. But I would implore you to Google your state and county mortgage relief programs and see what options may be available for you if this is a last kiss resort. But hope that helps. Again, if this is not your predicament, if you're a mortgage owner and you're on time with everything, but if you know anybody that is behind on their bills or behind on their mortgage or anything like that, these could be some good options for them. So they spread the word and just keep people in their homes. All right. But that's all for today. I hope all that was helpful. Appreciate you tuning in. Remember to subscribe to our YouTube channel. Right there on the bottom right hand corner, you'll see a red button that says subscribe. It's the Lone Ranger Podcast. Look for our symbol, and then also follow us on Instagram and TikTok at the Lone Ranger 08. All right. God bless y'all. Take care.